I am going to restart the recording. We are pleased to have you all here at our the Department of Conservation's second workshop associated with our forest biofuels program. And this one we're super excited to be doing in collaboration with iBank and the California Energy Commission. And you'll get to hear from Dan Adler and Rosaldo in a moment. But I just wanted to give a quick overview of our intention for this conversation. It looks like we have about 21 attendees, so thank you so much for being here today. We are reporting the workshop, and so we will make it available on the Department of Conservation's YouTube page, and we'll send out an alert to the folks who attended or who registered at least for this as soon as that's available. We structured this intending it to target emerging entrepreneurs, startups, and community groups who are really working toward community revitalization through natural and working lands management in the field of forest-sourced woody biomass utilization. And so utilization really includes bioenergy as well as biofuels and alternative wood products and other innovations in that space. Although most of the folks here, and especially because it's associated with our forest biofuels program, are going to be speaking with the bioenergy field in mind. So that being said, we're pleased to open the workshop, and I would love, Rosaldo, if you are able to give an introduction and a welcome from the Energy Commission perspective.
Sure. Yeah. Good afternoon, everyone. I would say I'll start with a big thank you to Elizabeth and the Department of Conservation for organizing, coordinating this very important workshop. I would say that from my personal perspective, I do recognize the importance of biomass, bioenergy. It's a resource that we need to address. There are technologies out there that have been proven to convert this into more useful product. I'm talking about the materials that are oftentimes considered a waste. They can be converted to fuels, electricity, and other uses. However, even though technologies are available, we are aware that there are other major challenges, in particular the financing cost of the technology. So I'm glad that we are holding these kind of discussions and workshops. I will also add that for folks who are familiar with the Energy Commission's EPIC program, they will know that we are funding different bioenergy demonstration projects. We have 4 large or community scale projects right now, but the support from CEC goes back even before the EPIC program, going back to our public interest energy research program. And so with these ongoing projects, we have seen a lot of challenges as well as opportunities. And again, big ones are focused on financing and costs. So I'm really glad that we're again discussing this one. So with that, I just want to say thank you again to everyone who are taking their time to join this workshop and participate. We're looking forward to your comments, feedbacks, suggestions, and points that hopefully everyone will learn and can use as their resource for pushing the bioenergy projects towards really success. So with that, thank you, and looking forward to further discussion.
Thank you so much, Rosaldo. I should have included in the introduction that you have been active in this space at least since the mid-2000s and funding a number of innovative biomat projects, right, when those came about. So yeah, really grateful to have your experience in this space. Thank you. Our second co-host, or third co-host, I should say, is the state's infrastructure bank. It's a public bank that does some really innovative financing around infrastructure and public needs and priorities of the administration. And so we're really lucky to have Dan Adler here from the iBank, who runs the Catalyst Fund and is Deputy Director for Climate Investments at the iBank. Dan, thank you.
Thank you, Elizabeth. It's great to be with you all again. This has become a favorite subject of mine in the last couple of years, not because I feel like we've figured it out, but We are seeing some interesting points of progress and proof of the thesis that this high hazard forest biomass can be turned into marketable materials and therefore attract capital. Looking forward to getting into that a little bit later in the discussion, but just kind of by way of framing, we are the state's iBank, that's our shorthand, but the full name is the Infrastructure and Economic Development Bank. And in some respects, those are two very different theses. You take scale assets and you build them up as infrastructure, and they operate at a certain degree of capital intensity and proven technology and outcomes. But we also have a mandate and dedicated programs that support early stage businesses, economic revitalization, economic opportunity in communities and on the ground. And it really is that second piece and that second set of associated tools, small business lending, loan guarantees, and frankly, financial support for early ventures that are policy critical that we need to bring more into this conversation. I entered and we entered as the technology's ready. Obviously, we're going to build it at scale, but I think we all know or increasingly learning that there's much more upfront work that more fits an economic development mindset before you can get to infrastructure. So we're privileged that we can service both ends of that spectrum or provide offerings that can address multiple market gaps. But our work is still to come in terms of integrating all of those financial offerings with the supportive policy environment to take early stage entrepreneurs up to the scale of infrastructure and capital that we all need if we're going to get our arms around this social and policy problem. So that's the challenge, and that's some of the themes I'm looking forward to digging into in the short term here. Thank you, Elizabeth.
Thank you so much, Dan. And so I just real quickly want to give a quick agenda overview so folks know what you're going to see today or hear today. We will be talking or hearing from Kristen Deckert at West Biofuels, talking a little bit about some of the challenges with financing these projects. As Dan mentioned, this has been and Rizaldo, this has been a very acute challenge noticed by anyone with even peripheral contact with the industry. And Kristen has experienced this firsthand and recently. And so we're really excited to hear a little bit more about some of the realities from her. I have learned so much from her in the conversations that we've had leading up to this workshop. So really grateful to have you, Kristen. And then we'll also hear from Rosa Cuchichia from River City Bank. They are one of the final investors in one of West Biofuels' most recent projects. And so I was really interested to hear more from her about some of River City Bank's driving motivations and values that lead them to invest in a sector that many other financing institutions really don't actually play well in. So really excited to hear from Rosa also. And then Dan will lead a conversation around some of those challenges and opportunities, bringing some of the private financing elements into the conversation as well as other public resources. And then we're really excited to close with some additional public and other financing opportunities in grant funding from the state and some of our partner institutions. And these are groups that the CEC actually works really closely with. So I'll look to Rizaldo to lead that conversation. At the end of our workshop, if we have time, we'd love to hear from you about other workshop topics that might be helpful in this space. So be thinking about that too as we go through this process. So for now, I will stop sharing screen and ask Kristen to give us an overview of what you have been through in the past year or two and some of the opportunities you've seen for us at the state and private developers to do better.
Thank you, Elizabeth. Thank you for inviting me today. It has been a real journey and a real learning experience. And before I get too started, I want to just say thank you really to everyone who's on your panel today. To borrow from a slightly more famous person than myself, is it really does take a village. And I think probably everyone listening in on this and trying to put together their own project and their team understands that very much. So we started out, to give you a little bit on West Biofuels, we are a developer of bioenergy technology, and we're also a contractor builder. So our projects start with the technology that has been researched and tested over the last 15 years in our research facility in Woodland, California. And we've just recently, and I say recently, but that means about 5 to 7 years ago, started really looking at how we could use our technology to help with some of the state's concerns around biomass, forest wood waste, creating clean energy, renewable energy. And we kicked all of that off with a project that we started up at Hat Creek near Burney Falls and the Shasta County area. And
I didn't get that.
Oh, sorry, my watch is asking me questions. This whole idea of being able to finance and build a plant started probably about 7 years ago, and much with the help of the CEC and their guidance and assistance in being able to do some of the engineering. And so I guess I would take that and say that our first challenges for this kind of a project and getting it to the stage now where we finally are where we wanted to be is sort of, it all started with pulling your team together. It takes a lot of people in a lot of corners of the industry, from the U.S. Forest Service, landowners, different feedstock providers, technology providers, bankers, investors, agencies offering grants. It really takes all of these people to pull one of these projects together. It's still a developing industry. As important as it is, it's still in the development stage. And I think that's one of the biggest challenges, is all of us who are in this space are breaking new ground on an industry that is not yet really proven or tested. So it takes getting the challenge of having faith in business partners, trusting you to accomplish what you say you're going to accomplish, and getting that information together. And then I think another challenge is just the sheer timeline. So we started, like I said, approximately 5 to 7 years ago on launching our project, our first project of a commercial size. And that process included really identifying all of the pieces of information, all of the hurdles that we thought we would accomplish or that we would run into over that time period. And I think that's another big challenge, is knowing what you're going to run up against before you get there, and knowing what information you need to have before you know that information even exists. So I find that the biggest challenge, just, I think I could say it over and over again, is that the process is very circular. You know, even vendors are excited to work with you, but they won't quote you pricing until they know that you've got financing. And of course, the financing won't come into play until you have all of the bids on your contracts. So that circular kind of chicken and an egg happens in many different aspects of getting the project off the ground. And it really makes it a challenge to get all of your business partners together. The rules change over time, the costs change over time. The budget that we started with 5 years ago is clearly very different from the budget that we had the year before COVID, which is very much different from the budget that we have now. So it takes a lot of manpower to keep up on those projects. And we're very fortunate. I talk about the challenges, but I think it's important to also identify we're very fortunate to also have a climate where people really want to solve the problem of forest fires. People really want to solve the problem of waste. and solve the problem of renewable, sustainable energy. And it made a real difference for us being able to face our challenges and having the support of the different agencies and banks and investors that wanted to see us succeed. So I think that's probably the largest challenge, is really pulling all those pieces together before you know you need them. And I guess my biggest piece of advice, I think, is start where you want to be finished and work your way back. And then every time your project is impacted by an event, go back to where do you want to be when you're finished? And how do you solve this next challenge that you've come up to? Because over the course of time, things change dramatically. People and agencies may get funding or lose funding with each budget year, and you're cycling over many budget years. There's timelines to grants where the work needs to be done within a specific timeline. And again, we've been very fortunate to work with agencies who want to see it. So I think that's probably the biggest challenges that we've faced, is getting that working group together at the beginning before you know who you need in your working group, getting your financing together before you know exactly how much financing you need, and getting your business partners committed before you have your other business partners committed. Those are probably the three big challenges to solve from the developer side of the fence.
Thank you so much, Kristen, and sorry about that recording thing.
That's okay.
Squirrely pad here. That has to be one of the most frustrating things of project development challenges of you mentioned it being circular, of a chicken and an egg issue, but I love your idea of starting where you want to be finished. Sort of having that goal and sticking with that goal as things change. I know we've had developers who were set back by supply chain costs, or had an actual wildfire in their space, or in one case I know of, CAL FIRE took over their site as an emergency response location. And so I'm wondering, like, every time something like that happens, how do you think about that sort of where you want to be and space? Like, does that change, or did that change for you in your experience, or did it just change the process of how you get to that end state?
I think from the beginning, we knew what we wanted to build, where we wanted to build it, and obviously we wanted to use our technology in building it. We had a lot of faith in our technology. So the end result really didn't change for us. Obviously, the commissioning date changed, whether we liked it or not, as these hurdles came up. So our deadlines moved a little bit here and there, but it was really more about, when a new challenge came in, who could help us, identifying who could help us solve the problem, and then telling the story to whoever that company was, or person was, or entity was, and being able to build the faith in them to give us the assistance we needed and the flexibility. Because you just have to, I felt like you have to go into it knowing that what you're planning today is not what's going to happen in 2 years, but staying focused on the end goal, and that these little setbacks along the way, while frustrating, are little setbacks, not overwhelming setbacks. Now, I say that because we did not have a wildfire on our location, and CAL FIRE did not stage in the middle of our construction site. So, I mean, we were, knock on wood, very fortunate to not have to incur those two events, but it is a lot about just staying flexible and knowing that it's a situation you're just not going to be able to control, and to keep your communication open with your business partners, keep your goal focused right where you want to be. I'm sure there's situations out there where the goal itself changes. In our case, we try and stay very focused that the end goal stays the same. And I think that helps build our credibility with our business partners as well, that they know that while we might be bobbing and weaving to solve problems and hurdles along the way, they know that we're not changing what our end goal is. We're staying focused on completing that task.
Awesome. Thank you. If folks have questions for Kristen, please feel free to put them in the chat or put them in the Q&A. We do have another 5 or 6 minutes in this segment. I'm wondering though, Kristen, you'd mentioned the opportunity, I think you meant, of being in a state government that's encouraging wildfire resilience and doing forest management that helps, of course, to feed literally and figuratively businesses like West Biofuels. Were you ever in a space where the state helped out as an advocate in terms of providing support for additional financing, or helping you to make the case to any of your suppliers or other logistics components?
I would say that was a constant. Because as we went through the process, there were situations where I would say we probably have 5 or 6 different agencies, or 7, that are involved in our project in some way. And there were many instances where I was able to pick up the phone or shoot an email to a representative in one of those agencies and get help that I needed. And vice versa. I think everyone who's been through the grant process knows that you need to have involvement and support from entities, vendors and suppliers and entities that are going to be involved in the project, and especially on these projects that are 20 years long, right? Getting that help and assistance was really constant through our entire process. And with our banking partner as well, Rosa at River City helped in tremendous ways to help keep the banking side moving forward as we ran into hurdles along the way as well. So I think just being able to pick up the phone or shoot an email and get the advice and assistance from really all of the agencies helped. And so that's where being in that environment where people really want to see these projects be successful, it can't be taken for granted, the support in the background. It's sort of impossible for me as a finance person. I'm not a scientist, so in addition to working on the financing side of things, I had to learn the science, right? I mean, you can only learn so much through osmosis in the office. So being able to focus my energy on that and tap the resource of these experts that are out in the field and know what's going on between different developers, between different projects, between different agencies, and tapping that information together is hugely helpful in understanding not just what's going on within our company and on our project, but within the industry that's so well impacted by each of these projects that are going down the pipeline simultaneously. I hope, it's my hope that 5 or 10 years ago, when things have kind of stabilized and this is an old industry instead of a new industry, that all of us with projects on the ground are working together constantly to help each other make them successful. So what the agencies and the government projects and funds are doing to help us get launched in the entrepreneurial stage, I think as we mature, we can provide that assistance and help to other projects and other companies coming in behind us. Because there's, in my mind, there's no shortage of opportunity to get these things launched. There's definitely enough space out there for all of us to be successful. So I guess that's my goal, or my hope. I'm not sure it's going to take more than me to make that happen, obviously, but I hope to see the industry grow that route. But the support that is available within the agencies and the financing area is just tremendous. Just I can't think, I'm sure I haven't gone a month without picking up the phone over the last 3 years and gotten the support and assistance from somebody on the other end of the line.
That's awesome to hear, Kristen. I'm so glad. I know the CEC and Rosaldo and his program was a big part of that, and our other sibling agencies as well. So it's great to hear that. And I do think that it sometimes just takes one person to make these changes happen. And I think your willingness to reach out and be a resource for other similar businesses really sets the tone of, yes, it's a private business. Yes, the goal is profit, but also in partnership with doing something really good for California that is a stated policy priority for our administration in terms of forest health and renewable energy. So yeah, we're really, really happy to hear that and happy to be in partnership with you on that. Thank you.
Thank you.
Yeah. All right. And on that collaborative note, I would love to invite Rosa Cuchitia to our Zoom stage. Thank you. Rosa, through River City Bank, as I understand it, at least, was part of the final financing package that allowed West Biofuels program to move forward. So it's really a wonderful feeling to have both of you here today. And really, as I mentioned, excited to hear from Rosa about some of what led to River City Bank's decision to work in this space, in a space that so many private institutions are not comfortable in. So Rosa, please take the stage. Thank you so much for being here.
Yeah, thank you, Elizabeth and Kristen. Always a pleasure. It's great to hear from your perspective. And I know we've talked about all of the challenges together over the past year or so, but it's good to hear kind of, where you started and where we are now. So I did prepare a few slides, so I'm going to share my screen. Give me just a second while I figure that out. Let's see here. All right. I think you guys should be seeing my screen now. Good. So as Elizabeth mentioned, I'm Rosa Cuchicha. I'm the director of the Clean Energy Division at River City Bank. We were part of the financing team that helped Kristen with the Hat Creek Bioenergy project financial close earlier this year, and we've had at least one other bioenergy finance experience behind our back before that. So I guess you could say we're an expert. There's only been two, and we're working on a few other opportunities as we speak. And it's definitely exciting to be a part of history, I think, in California and the biomass sector. So before I dive in, I just wanted to give all of you on the call just a quick background of River City Bank. Some of you may have heard of us, some of you may have never heard of us, so I'll just take the next couple of minutes and give you a quick overview. So we're based headquartered in Sacramento, California. We've been in business now for 50 years this year, so it's pretty long history for a bank of our size that really started as a community bank, and now we've grown into a commercial business bank with over 4 billion in assets. And just a little bit about our history. I mentioned we're celebrating our 50-year anniversary this year, which really in banking is quite a big feat. You've probably heard of a lot of bank mergers and acquisitions that have happened over the years, and a lot of consolidation in the industry in that 50-year period. And we've still maintained our same ownership structure, which is under mostly under a family ownership under the Kelly family. John Kelly was the founding member of the bank, and his daughter is now chairman of the bank, and we've got generation 3 also working at the bank. So we really can resonate with a lot of clients and businesses in California that are either currently family operated or have a history of family operations. So that's kind of a fun fact about us. I'm actually located in our San Francisco office, and so I'm in the Bay Area, but we really do have clients across the state and even outside of the state now as we're growing our lending footprint. So why clean energy? I get this question a lot and I love answering it. This is a snippet from back in 2018 from the Sacramento Business Journal, when River City Bank formally formed the Clean Energy Division, which I lead with my team. We've been in the clean energy space actually longer than 2018, for about a decade. And it all started with our involvement in the community choice aggregation, or CCA space in California. We were the first and only bank for a long period of time to provide financing and banking services to CCA entities. So that was definitely a huge growth opportunity for the bank, and it got to a point in 2018 where it really grew into a separate division of the bank. And so I've been lucky enough to grow that part of the business. And in addition to working with the CCAs in California, it really opened up an opportunity for us to learn more about renewable energy, and that really kind of catapulted us into being a project finance lender, which is really what we're going to talk about today: the project financing aspects of biomass projects. We provide debt kind of on the smaller side, around 5 million up to about 50 million. But we've definitely partnered with other banks for some larger projects. And so I'd say, within that range is kind of where we play in terms of the debt sizing. And then in addition to, just general corporate banking, like lines of credits and things like that, and the project finance side, I'd say what's been keeping my team and I busiest in the past year or so is our deposit gathering operations. So banks need deposits in order to make loans. Some people don't recognize the connect there, but that's our funding source as a bank. And so it's definitely been keeping us busy, and is a big part of what I do and what my team does. So wouldn't be doing my job if I didn't make an announcement on this call. So if there's anybody here that's looking for a new bank or has excess funds and wants to place it with a very stable bank that's got 50 years of operating history and a passion and values that align with yours, give me a call. We'd love to accept your deposits. So on that note, I'll talk a little bit about the experience we've had in the bioenergy sector. That's Kristen over there on the left on the screen, and then you can see me in green on the far right. This was back in April at the groundbreaking event of the Hat Creek Bioenergy Project up in Bernie, California. Definitely the funnest part of the financial I guess timeline is getting to get your boots dirty and actually be part of the groundbreaking. It was kind of a fun moment. And then on the right, we've got a picture of another facility we financed a couple of years ago for a rice mill operation. So those are the two projects that we've been involved in. I'll stop there and see if there's any questions. What I'm going to go into next is just kind of key credit considerations for biomass facilities on the slide, which sort of overlaps a little bit with what Kristen was talking about in terms of, some of the challenges in providing financing. So if there's any questions, here's an opportunity for you. If not, I will keep going.
Thank you, Rosa. I don't see any in the chat or Q&A, but if folks would like to raise their hand, I can allow you to unmute if you would like to ask any questions about anything Rosa has presented so far.
Okay, I'll dive in. I'm sure there'll be some questions at the end.
Thanks,
So
Rosa.
yeah, so as Elizabeth and Kristen alluded to, River City Bank did provide the debt financing for the Hat Creek Bioenergy project. And just to, I guess, lay the groundwork, whenever you're financing a project, I think most of you are familiar with sort of the capital stack. There's typically the equity piece, which comes from the owner of the project. Sometimes there's a third party that provides tax equity or additional equity in terms of in exchange for tax credits. And then the third piece is the bank debt. And that's typically, somewhere around 40 to 60% of the capital stack, depending on the type of project. And so that's the piece that we're focusing on today, is the debt financing. Before you go to your bank to talk about financing, usually the equity piece and the tax equity piece are either finalized or about to be finalized, and the bank financing is sort of the last step. But sometimes, we get involved earlier on, but really the right time to talk to your banker is about a loan is when you have the other pieces of your capital stack already committed and prepared. And I'll throw in there too, since we're talking about grants later, we consider grants as part of equity. If you're getting money from a government agency or a third party, that does count as equity towards the project. And so we definitely love seeing projects that have got lots of grants. So I'll throw that in there. So
hey, Rosa.
Yeah.
I'm sorry. There was someone who raised their hand right as we went into this segment. So
Sure.
I just want to ask Hemant Badness if you would like to ask your question.
Sure. Thank you very much. By the way, this is really very helpful. I know the objective of the topic is biomass into products and also into energy. Does River City Bank also finance for projects that are that create physical, tangible products versus energy related items?
Do you mean like renewable natural gas or something
No,
different?
I mean, I'm talking paper products that can be sold to either consumers or commercial entities.
Yeah, I mean, that's definitely something we would look at. That would kind of fall more under, that wouldn't really fall under the project finance umbrella. That would fall under sort of the commercial business operations umbrella. And it's really no different than, somebody, coming to us for a line of credit if they have a manufacturing facility. It all comes down to dollars and cents and what the cash flow of the businesses and what the financial backing looks like, but definitely something that we look at.
Great, thank you.
Yeah, sure.
Thanks, Rosa. We did have another question from Greg Stengel about commenting on rates in project finance today in light of the run up in federal funds and prime rates. Do you want to answer that now, or would you like to take that after you're done running through your current?
I think that's on my next slide, but I'm
Awesome.
happy to address it, I guess indirectly. So yes, interest rates have gone up in line with the Fed funds rate also increasing. We tend to price most of our debt based on treasury notes plus a yield. and Treasury notes, and have also increased in rates in tandem with the Fed funds rate. So yes, we're definitely seeing an increase there. But how banks look at interest rate is really the credit spread itself, which hasn't really changed much for us, which gets tacked on top of the base rate. And it's the base rate that's been increasing, not necessarily the credit spread. So the net effect to you as the borrower is the same. It's more expensive to borrow. But I think it's an important distinction, because when the base rates stay the same and the credit spreads are increasing, that means, the banking sector views the project or the business as riskier. And from our perspective, we haven't been increasing that spread. We've sort of maintained that at the same level or similar level. And then there's the base rates that have been increasing. We do fix, mostly provide fixed rate interest. So how that works, and Kristen will know this fondly from our process, is there's generally a term sheet that's prepared that'll outline the terms of the financing that the bank is offering to the borrower. And once that term sheet is signed and the initial deposits that are required are received by the bank, the interest rate is fixed for a period of time. So it does provide some assurances to you as the borrower to help you plan your budget. So hey, once I sign this with the bank, this is what my interest rate is going to be, provided that we can close the loan within a period of time. There's a lot of different things that can happen and go wrong within that period. So we definitely make sure that we work with our clients to give them a reasonable time frame, and then make sure we go over the loan package to make sure that the project is really ready for prime time, because that's the point where you really want to be talking to your bank about fixing the interest rates there. And I'd say spreads range, depends on credit, and the bank, at least River City Bank, we do price everything off of a case-by-case basis, so we don't have like a formula. But I'd say your credit spreads right now are anywhere from 2 to 3% over the corresponding U.S. Treasury. That's kind of where the market is right now.
Great. Thank you so much, Rosa. And we also have a question about how important loan guarantees are in your financing decisions, which it sounds like you were kind of getting into with this slide. So if you want to continue your slides, we'll maybe save the rest of the questions for when you're done.
Absolutely. Yeah. And I do have some other slides on guarantees. So definitely. Okay, so going back to key credit considerations for biomass facility, this is not an exhaustive list. This is just sort of I'd say, more of the important items that we look at. So whenever I get a phone call or my team gets a phone call about a project financing opportunity, these are the things that we ask for before we spend a lot of time on providing feedback on can we provide loan terms or indicative pricing or anything like that on this particular opportunity. I would say that we first look at the development and construction team. Sometimes they're the same people, sometimes they're not, which is why I put the slash there. The experience. So basically, has you as a developer done this before? And if so, how did that project go? If you haven't, have you hired people around you that know what they're doing and can sort of facilitate through the development process? Because there's, as Kristen alluded to, there's a lot of steps early on before you even get to the point where you talk to the bank. And then on the construction side, has the construction team worked on this particular type of project or technology? What are their experiences? Do they have bonding or assurances in place, in case there's any delays or anything that comes up during construction? I will say I've never financed a project that actually finishes on time. So there will be delays. And the more projects we look at in finance, we kind of get an idea of this is the budget, this is the construction timeline, and you sort of start to get a little bit better at estimating how much extra time is needed, but it's not an exact science. So that's really important. And we also like to ask for the financials of the sponsor entity, to see, even if it is not a direct borrower or obligor of the loan, we like to see kind of what the skin in the game, quote unquote, is. And if there are significant issues down the road, does that sponsor entity have the ability to step up and help get the project across the line? Because that's probably the biggest risk that banks want to mitigate against when financing construction is the completion risk and potential cost overruns. We also look at, especially for biomass projects, plant operator experience. It's very different than solar. You construct solar, you throw it up, and the sun does all the work for you. And yeah, you've got to, have some people come and, wash the solar panels and monitor and make sure everything's working. But it's, not anything close to, the operations that are needed for a bioenergy plant, which has to run 24/7, and it's a very niche type of skill set. And so we spend a lot of time looking at the operations side of it, and look at some contingency plans around staffing. Well, what happens if you don't have adequate staffing? What are the contingencies in place, and how does that impact the future operations of the plant? Source and strength of equity providers. I touched a little bit about that earlier. We really look at, how much equity is going into the project outside of debt. Banks always want more equity. It lowers the risk, but like I said, the bank debt typically is about 40 to 60% of the capital stack, depending on the type of project and the guarantees and all of that. And so that means, you need, about upwards of 60% coming from other sources. So what are those sources? If something goes wrong with the budget and there are cost overruns, how will that be handled? And so those are things that we look at. And that's really tied to the experience of the team. And then lastly, we look at, the offtake and the feedstock contracts. Those are really important. I think I highlighted in green. Number one issue we see with biomass financing is the lack or insufficient feedstock contracts. Sometimes it's very, it's very easy to get for example, a 20-year power purchase agreement or a PPA. That's your revenue contract, but I've never seen a feedstock contract that's 20 years, and I wish that there were some more innovations around that, because it would make financing a lot easier, because it is probably the number one risk once the project is constructed and everything's ready to go. You can't produce anything unless you have the feedstock, and so it is the number one risk once the plant is operated, or is operating, I should say. What we've seen around this is sometimes there are shorter term contracts that either match the term of the loan or a portion of the loan, and then we get creative on the back end and have to get comfortable with the sourcing of the feedstock. Especially in the woody biomass side, we look to the Forestry Service and want to see that there's ample feedstock available. We know it's available. It's just a matter of making sure that the location of the plant is within proximity to sufficient feedstock. And that there are considerations being made about how that's sourced, and definitely contingencies, because things can go wrong. So those are the key credit considerations that we really kind of dig into. I'm sure there's a few points here that I've missed, but these I'd say, you know, are the main items that we like to kind of flesh out before we dig into the project and provide our answer on any loan application.
Super helpful, Rosa. Thank you so much. And lots of good questions coming up here from our participants. One of them, before we get to Dan, and I know Dan, you'll have even more questions for Rosa and Kristen. Hemin is wondering if there's a conflict of the off-taker also being an equity investor.
Oh, interesting. I've not had that happen before. I mean, there's always conflicts when you've got, you know, same party providing, you know, different services, but I'd almost view it as a potentially a positive, depending on the source of the feedstock. So it's sort of like you own, let's say it's, you know, I don't know, maybe you own a timber mill or something like that, but you also want to add a bioenergy project on site. You know, you have the feedstock there. You just have to, I guess we'd have to make sure that the contract itself is financeable and sufficient. So yeah, there's ways around that, but it's a good question. Yeah.
Thank you. And sorry, I didn't mean to cut you off. It looks like you have more information here.
No, yeah, it's just I think one more slide. I thought this would be helpful. This is kind of a continuation of what I was talking about the key credit considerations. But this is sort of a checklist of, you know, preparing yourself for a bank loan. We call it a bank package. Because we get, what I love about my job is I get phone calls from people, you know, that are just getting started in developing a project. And so they're probably, you know, 2-3 years away from, you know, going out for financing, and that's exciting, but you know, it's also a lot of work for the bank to spend a lot of time and resources on vetting projects that are just not quite ready for prime time. So this is kind of a list of things that, you know, we go over with clients that we think they have a good project, but it, you know, they've got to go through all the permitting and find their equity capital and all of that. So maybe they can call us in a year or two and have all of these things checked marked, and then we can talk. I'll run it through quickly. The construction and operating budget, very important. It's going to change. I don't think I've ever closed on a financing deal where the budget didn't change at least 3 or 4 times. It happens. But this is where I would advise borrowers to even maybe get some outside help from CPAs or other sources that have experience with putting these types of budgets together. Because the more accurate it is upfront when you start the conversation with the bank, it makes the process so much easier. It's always hard when you've come and you've asked the bank for, let's say, $10 million, and then you come back 3 months later and say, actually, I need 15. So it's just easier to kind of have all of that buttoned up. But you know, bankers know that it will change as you finalize your contracts. And then I put in here that it's what we like to see in there is the sources and uses of capital. So that's where, you know, we're going back to that capital stack. You know, how much is equity, how much is coming from grants, and then how much do you need the bank to fund. Financial statements, believe it or not, this is one where we get a lot of pushback from prospective borrowers. Because they don't want to bother if, for example, if it's a project that has multiple different off-takers or multiple different feedstock providers, they don't want to bother them all about getting their financial package. But my advice is always get it upfront. If you need to sign an NDA or if the bank needs to sign an NDA, let's get that done, because the bank can't do much without seeing the financials of especially the off-taker. Certain cases, the feedstock provider, depending on the deal, and then always the sponsor entity. So if there's one takeaway from this entire presentation is get the financial statements, because otherwise banks can't give you much feedback. Offtake and feedstock agreements fully executed. Sometimes we work with folks that have kind of drafts that are being negotiated. But I'd say it's difficult if you don't have anything and if you don't even know who you're going to sell the energy to or who's going to be your feedstock provider. It's just very difficult to have a conversation with the bank, and it's difficult to put your budget together. So definitely, I'd say those two items are crucial. Business plan. This one, I have to commend Kristen and the Hat Creek team for their vision when they put together their project. They had a fantastic business plan put together, which made it really easy for me and my credit team to really understand, not just the construction risks associated with the project, which is where banks tend to spend a lot of their time, but the operational risks and how they planned to staff the plant and their feedstock contingency plan. This was gold and was very impressive. So I definitely encourage you to put that to put a business plan together for biomass facilities. And then, the obvious one, permits and environmental reports, kind of having a clear list of what you need there. I didn't put it on the list, but I want to mention it. And Kristen alluded to this, is the relationship you build with your bankers and your other parties is really crucial. And having that to be very transparent. I can't even count how many times I got phone calls from Kristen and she's like, "Hi, there's this issue. Here's how we propose that we address it." And it was kind of a very natural relationship where, I would tell her, "Okay, I think we can work with that, but this is going to be an issue." So she'd go back to her people, I'd go back to mine, and then we'd come together and we'd find a path forward. And so I'd say just the relationship you build and that transparency and trust, you can't really put a value on it, but it is really important. So I think I'm at time. So this is my last slide. And I think this will go into Dan's topics as well, is other credit considerations on the deal structure. Somebody asked about guarantees. On the Hat Creek bioenergy transaction, we did have a USDA guarantee. And so that definitely helped the bank get to the yes on the loan approval. And it provided some credit enhancement and I think more attractive credit spread on the pricing. We also, I put on here co-lending arrangements with other lenders and with iBank. Dan and I are in talks presently about a new deal where, hopefully we'll work together and in some capacity, whether it's co-lenders or some form of joint venture. I think that can always be very helpful. And then I mentioned this earlier, grants are equity capital. So go get all the grants that you can get your hands on. So with that, I will stop talking and I'm here for questions. Thank you, everyone.
Super informative, Rosa. Thank you so much. Rather than taking up time reading questions, I would like to invite Dan to take over here. And Dan, I don't know if you want help with doing the Q&A or anything like that. I'm happy to support you, but also happy to just get out of the way if you'd rather handle it.
I'm happy to give it a shot. I'll offer a few comments and then maybe jump back and forth over to the Q&A. And then if time permits, got a few questions for our esteemed panelists to draw out a little bit more about what they said. All right, I'll jump right in. Thanks again for letting me join you here. Greetings, everybody. I'm Dan Adler. I'm with the iBank Deputy Director for Climate Finance. We have, as mentioned, we have been building up what we're calling the Climate Catalyst Fund, which is a private lending facility that sits inside iBank, which has been a traditional municipal lender. And now we're doubling, tripling our focus on climate across all of our programs and adding this capacity to directly lend to private parties building climate solutions. The first task that was put before us by the state when we set up this fund was to try and help grow markets for forest biomass utilization. So that was 2+ years ago. We have been in the market looking for transactions. We, to the point earlier about budgets whipsawing, we had to freeze our engagement for about 6 months this year, just as we were, I think, getting closer to some transactions. But it has given us something of a vantage point on the activity in California, both on the policy side, how policy is changing to try and help these markets grow, but probably more importantly, what's happening with entrepreneurship and project proponents and capital partners like the ones you just heard from. So I thought I'd give a little bit of kind of the lay of the land, or maybe a kind of the classic headwinds, tailwinds view, that things that we've seen and that we're working through. And then I will try and talk about some of the other public policy related finance tools that are being brought to bear, including things like guarantees. And there was a question about what tax equity is, how it works, and what it might do for this sector. So I'll spend a little bit of time on that. But let me just give a couple of high-level observations as, thinking about this as an investor, a public investor with a public policy mandate, but still we're making loans. We want this money to come back so that we can revolve it and do more of it. So it seems, pretty clear to me, at least, that the sector is maturing, which isn't to say it's fully mature, but it's for lenders who are just fundamentally risk-averse animals. It doesn't take a lot of proof points to get a lender or more developers or equity providers into a sector, but you have to have a few. Nobody really wants to go first in the lending world. Some banks, some lenders do that, and they're frankly a little bit heroic, and you just heard from one of them. So to the extent you have a Hat Creek breaking ground and on schedule and on budget, and a River City Bank saying in public and to their colleagues, this stuff works, the technology is there, the market environment's good, not everything's perfect, but we're going to keep doing it. That sort of signaling investor to investor and entrepreneur to entrepreneur is increasing. We did come through a cataclysmic series of social factors that have put us behind schedule in a lot of respects, be it the wildfire season, be it COVID, be it supply chain disruption. These three macro forces kind of all convening at a point in time when the state was trying to really jumpstart this industry has kind of on the tailwind side said, okay, we see some project level development, but the sector as a whole is not increasing in its scale and appetite for capital and maturity. So why is that? Are there more tools we need, or is it just fundamentally the case that this sector doesn't scale the way we thought it would? I don't share that view, but that is in the tailwind conservative finance arena. Another thing that has been striking, at least for us at iBank, is, again, this is not always infrastructure scale. It's somewhere between small infrastructure and local economic development and kind of early entrepreneurship support. And there just really aren't a lot of, frankly, finance shops that know how to do both of those things. You see that in the venture equity world, where there's a compelling piece of intellectual property, and therefore the equity investor puts the services around the entrepreneur and the IP because there's great financial upside. In some cases, that's true here, but in many cases, what you get to is an asset that is selling a commodity, and it's socially beneficial in a decent business, but there's not a lot of juice in that squeeze, as people sometimes say. So we need to think about it not just as a senior debt into proven technology and then everything's a straight shot. There's just way more that's required in a small business support environment, including guarantees. And one thing I would point folks to is the program that iBank has been running through our Small Business Finance Center, where we have been trying on the direct loan side to find projects to put capital to, and we are convinced we will do that. We've had some, I won't say surprising, but notable success in directing smaller projects to our guarantee window, which is an exercise of utilizing federal capital that backstops our small business guarantee program, connecting the project proponent to our network of lenders who will then underwrite that project, and they'll keep some skin in the game, but we can backstop up to 80% of a loan for an early business or an early technology or early venture. So it's a nice combination of public and private finance that still keeps that business discipline in place, and which is important because eventually we'd love to see that lender do the second, third, fourth, and fifth such deals without needing the backstop from the public sector. So it's that less about everything is proven technologically and it's ready to absorb 50 million. We need to have more sophisticated tools at the local and smaller scale. I would highlight, and I think we'll hear more about this shortly, that the policy environment is getting, I'd say, more sophisticated. We've had really important policy drivers in this sector for a while in terms of the offtake agreements for things like electricity. And my opinion, I hope we can get to other types of offtake, maybe for commodity energy products that are more scalable and have better kind of inherent economics. But nonetheless, that's an anchor sort of macro policy market shaping force. But underneath that, we've recently, in years that I've been in this business, started making more grants specifically for things like business model development, short-term loans for specific project costs like interconnection agreements for power plants. I've been fortunate to work with the Hat Creek team and River City on a specific example there. Sophisticated, nuanced little interventions with grant money like transportation subsidies, or really putting some effort into what Rosa rightly highlighted as this maybe the single biggest financing challenge in all of this, which is the feedstock supply. We've known, I think, as policymakers for a long time that that's true, but what are we going to do about it? And so in the last several years, you've seen focused efforts from our planning agencies to help communities organize themselves and kind of bulk up their, I'll just call it kind of commercial readiness, so that they can engage on behalf of the feedstock provider community, including the layers of government that entails, with somebody who wants that commodity and say, we'll put it here at this point in time, in this volume, at this price. And that is a key piece of the sort of interstices of the marketplace. That is a social policy collective action challenge. And so that's where government should be. And that's, I think, beneficially where grant makers are increasingly looking. We need to do more of that. And you all should be telling everybody that we need to do more of that, because it's not obviously broadly embraced as a key tool for the state in enhancing our approach to this challenge. There's more and more coming at the federal level. There's a whole lot in the Inflation Reduction Act that we're excited about. There's a large bolus of capital that's coming down in the next 6 to 12 months that we are hopeful will be enhancements to the Catalyst Fund and to other direct lending pools here in the state that can help us stay in this game and have more capital and revolve it to more projects. It doesn't change the underwriting criteria. We still need good transactions and be clear about what risks we can take and what we can't. But there's a lot of federal money there. And there's also a lot on the tax credit side. I'll come back to that in just a minute. We heard about USDA. To my mind, that might be the most impactful program right now when we talk to other lenders. That is very nice, up to $25 million, 80% guarantee on a senior loan for technologies that use these sorts of feedstocks. That's sitting there. The federal government's been providing that. There's no signal it's going to go away. So we should be shaping, frankly, our investment strategies for that as sort of the end customer, if you will. Once that guarantee is in place, lenders can exit a transaction if they choose to, sell that covered loan to long-term asset owners, and then revolve their origination money back into more transactions. So a key pillar of this whole sector is that federal guarantee. Emerging is the Loan Programs Office at DOE. They have more money than, frankly, I won't say God, but nearly. And they are struggling, frankly, to find all the channels in the marketplace that they can to deploy capital in the timeframes that the Inflation Reduction Act and bipartisan infrastructure law require. How does that impact what we're talking about here? There's plays on greening the dirty infrastructure system. So if you've got a natural gas pipeline that could be turned to biomethane, or could be repurposed for hydrogen production or ethanol, or you name it, whatever the chemistries are, we could turn these feedstocks into. There's a pool of capital there. So again, think about, to Kristen's great point, where do you want to be at the end? Build that in now. If you're talking about an end market or a later stage capital provider, it's a long run between a startup to that place. But there are programs that are reaching their hand out, and part of our role at iBank and in our sister agency, GoBiz, Governor's Office of Business and Economic Development, is to try and make those connections. They're specialists, business development specialists, looking to help connect all these dots. So before I get to the tax equity piece, in conclusion, there's still a significant number of challenges that we have to get serious about. There are individual transactions that we're busy in. I think we'll usefully deploy the capital the state has put in our hands. But to really take this up to the next level, and this is simplifying, but I think it's still clarifying to a degree, this sector is characterized by a host of risks that, frankly, many other clean energy, clean technology sectors do not face. At least they don't face all of them. We heard about the input side of the equation. The sun arrives pretty reliably. The wind, for the most part, arrives pretty reliably. It's hard to say that about the biomass feedstock supply. So that's a discrete, very significant risk. We have some theories and models about how to address. At the end, you've got, with the exception of the electricity sector, some uncertainty about who wants your stuff. They might want it. They might say they want it. It's a good market in aggregate, but your offering, your project specifically connects to what purchaser in what way. Is it contracted? What's the nature of that contract, the tenor, the price? What values are you trying to monetize? We see a lot of things that have, multiple streams of benefits. Maybe it's an electricity product or it's a post and pole product, and those are, fairly straightforward. But then you get into biochar, You might get into some carbon credits, and those markets are kind of a Wild West. So an equity investor might see great opportunity to get outsized returns off of that. But a lender has to look at that and say, that's all well and good, but it's quite speculative. So my underwriting exercise is really just what I can count on. So then you're thinking about electricity, which is a commodity market. These electrons are relatively expensive. There's a good space in the policy environment to sell them, but it doesn't always make a lot of headroom for an operator, even though the power price is high that you're selling the electrons for. There's a lot of costs underneath it, particularly if things like the feedstock are uncertain. And in the middle is the technology question. You know, there are a lot of ways to use this stuff technologically, but some are proven and some are not, and most are still quite nascent, particularly at the real greenhouse gas beneficial edge of the technology profile. So you layer in these three big categories of risk: inputs, you know, process issues, and outputs. And we just need to be constantly mindful that building your business, building your approach needs to be clear-eyed about all of that going in, because it's hard after the fact, after a certain financing event or maybe a developmental challenge, kind of retool on one or more of those factors. So that's just a little bit of a word of caution, or at least lessons we've seen. Again, there's plenty of great opportunities. You've heard from some today, and there's more to come. But we do want to be straightforward in what we're seeing, since we're a public agency and we're aligned with the public purpose. We need to be transparent in what we see, because it enables a better policy conversation and better partnerships like this one. Okay, so let me speak a little bit more in depth to what's happening on the federal side as it relates to tax credits or tax equity. There was a question in the Q&A about what tax equity is. It's a little bit of an artifice, but basically tax credits have been the tool of choice for the federal government for almost 20 years now, maybe more, in fact. Instead of having a carbon price, instead of requiring a certain amount of clean energy output, the federal government subsidizes clean energy infrastructure through the provision of what are effectively tax credits. They can be based on the value of the investment, like one-time compensation for your investment, or in certain technologies, they're paid out over time based on the performance of that technology. More and more trend towards the investment tax credit. You invest a chunk of capital, you get a portion of that back in a tax credit. Why it's called tax equity and not just a tax credit payment is the notion that the tax party, the party that wants those tax credits to offset their federal liabilities, is actually going to be a partner in the deal and is going to sit there and be in the transaction for a while, work through challenges, actually be a partner and earn the value of the tax credits, not just simply drop in for a minute and get those tax credits and then be gone. So that has led to a lot of really complicated investment structures that the industry of clean energy has created in the last 10 years, that the IRA kind of blew up and basically said, sorry, Wall Street and consulting banks, we want to have a different, more efficient way. So we're going to let projects take advantage of two new monetization mechanisms, one of which is dedicated, interestingly, for nonprofits, tax-exempt entities that have been kind of left out of this incentive structure. There's now an elective pay model where if you invest your capital in the project as a nonprofit development company, you can receive cash in the value of what would have been your tax credit if you were a taxpayer in a lump sum payment tranched at the completion of your development process. Hugely valuable, still under development, but something we're closely watching and relevant to community-based projects across the board. And the other one is this transferability concept, where instead of having to build in this complicated relationship with a bank or an insurance company as a project developer, you can effectively, once you've hit a milestone, transfer the value of that tax offset to a third party in exchange for cash. So it opens the field for a bunch of different folks who want to provide capital to investments in clean energy, but don't want to bind themselves into these partnership, sale, leaseback, partnership flip model, complicated legal structures. So that's something that this community should be aware of. There are new ways to access that tax credit value and put it into your project. We are thinking about the role of public finance, if there is one, in helping bridge this or at least simplify it. I mean, what I've just described to you is probably hard to grasp if you're not steeped in this, but it's getting simpler, and the intention is to make it even simpler yet. So we can be a partner to that work as you think through it. In addition, the last thing I'll say on tax credits right now, in addition to expanding folks who can take advantage of tax credits, the IRA extended the runway for these programs. Instead of waxing and waning every couple of years, which was maddening, they're now set in stone for a decade, and they're uncapped. So when you see what is the total value of clean energy financing under the IRA, nobody really knows, because it could be $1 trillion. It could be more, because these tax credits are not capped and there's a lot of demand for them. Nobody wants to pay their taxes if they can avoid it. And then so it's now more extended, it's available to more folks, and it's richer based on what your project looks like. There's a base level of tax credits, there's adders for using domestic content, there's more adders for operating in certain priority communities, there's more adders in being adjacent to and working with tribal communities. It goes on, and it goes north of 40 or 50 or even 60% of the total cost of your project if you're, perfectly located so that you can monetize all these benefits. The point is, it's a lot of money. And while it's complicated to get your mind around, the federal government's trying to simplify it and building in an approach to getting that tax value into your projects. The federal government's saying, we want to support what you're doing. California's saying that. So it's something of a burden on the developer and entrepreneur to parse all this, but it's real value. It's evolving right now, and it's going to be with us for quite a few years. So I would just encourage you to factor that in when you think about your capital structuring, and find a CPA to help you think through it, as was mentioned earlier. So that's what I wanted to share by way of what we're seeing, what we're doing, and how we're thinking about the federal side. I think that will be all from me. Let me take a quick scan of the Q&A. Looks like we've answered most of the questions, if not all the questions, already in play here. Oh, here's one from Seth. Have you seen offtake agreements for renewable biofuels, LCFS and RFS credits, and other outputs? Do all these need to be wrapped up completely before financing? That's a great question. And we have seen offtake agreements for, not for the fuels. No, I mean, I've heard that they're out there. We have not had a project come to us that's presented those. Maybe Rosa has seen that. We're keen to see it. We're keen to see the state and the policy community think about that more. I'm a big believer in these more flexible molecules as the delivery mechanism for the value of biomass derived products that can be then converted into electricity or other chemistries or end products. And the LCFS and RFS credits, not so much on the LCFS side. There's a lot of conversations about how to underwrite the LCFS. Again, pretty nascent. This last piece, was the last question, do they all need to be wrapped up completely before financing? It really depends on what else is happening, to my mind, and I'll let Rosa take this one too. What's happening elsewhere in terms of the debt service coverage ratio, the golden metric of it all. If you've got the ability to cover your debt without recourse to some of these more speculative products, and it's all equity upside for you or your equity partners, then we can have a conversation just about what is contracted. But we've seen projects that you really need to have an optimistic view of every single one of those outputs just to see a coverage ratio on the loan repayment that you can get comfortable with. And frankly, that's not a place that even a publicly aligned lender like us has been comfortable going just yet. But Rosa, maybe you've got a different view or more to add.
Yeah, that was very well said, Dan. You mentioned all of the risks that we talked about, especially on biomass, where you've got the input, you've got the output risk, and so you really can't take a risk on your revenues and your debt service coverage. And so that's not an area where at least River City Bank is comfortable with financing. So we need to see fully contracted revenues that cover the proposed debt service by a specific amount. And generally we like to see 2x. That's not always that's not where we write the contract, but we like to see that there's cushion. Usually on these projects you need at least a 1.5. So 1.5 times debt service coverage for the contracted revenues. I do know that my colleague has chatted with a few projects that are playing in the LCFS credit market. And some developers are looking at contracting a portion of the revenues to make the banks happy. And then they can have a portion of the cash flows that are sort of either merchant or, beholden to floating credit market, like the LCFS market is. And yeah, we haven't financed a deal like that, but we've kind of had conversations on that. So that would be my advice. And in terms of having it all wrapped up before you talk to your bank, I'd say absolutely. You want to at least know which direction you're going, because the first thing your banker is going to ask for is, where's your financial model? And that financial model is going to have to be pretty accurate on, what are your sources of revenue and what are your expenses, and then how does that foot with the coverage ratios and the amount of debt that you're seeking.
Great. Well, I think that's it for the Q&A and the chat, but keep it coming. We do have time, although I'm mindful I only have a few more minutes before we're going to keep moving on the agenda. But I wanted to actually come back to you, Rosa, with a point you made kind of in passing that really struck me. You mentioned that you occasionally get calls from project proponents months, years in advance of something that you would consider financeable or that might mature to financeability. Number one, I don't know that people necessarily are aware that there's an opportunity to engage a lender like that. I sense a lot of like, oh, we can't go talk to the bank yet. We haven't figured out all this stuff, but we don't know what we don't know, right? So I wonder if you could say a little bit more about sort of the nature of that conversation, or what
Sure.
the sort of first things you wish people knew about initiating a lender dialogue, either to take some of that pressure out or maybe just facilitate a better first discussion.
Yeah, absolutely. Well, first, I'll predicate that my motto is I always take the meeting. You never know if there's going to be an opportunity today or tomorrow or 10 years from now. I always take the meeting. But before I can assign, a credit team to start looking at the deal and then start giving you terms on what the bank can do, we need to see sort of the things on the list that I talked about. The budget, the capital stack, and sometimes it's kind of fun because you're providing some help. You're like, hey, you're looking for tax equity. I know a guy who is actually looking for something just like this. So it's all about the network, and I'm always happy to take that meeting. But I'm going to be very upfront about where we will spend our time, and what we need in order to move forward to that next step where we're actually looking at the like an actual loan application seriously.
You mentioned also that there are these services available for entrepreneurs, and like basically CFO on a consultative basis. And we talk with the folks at Blue Forest, and they often will route younger startup type businesses to services like that. And I get the sense that that is not always known, that you can do that. And so people who are maybe technology focused or have run a business for a long time, but maybe moving into an adjacent space, maybe don't know that those services exist, that it's sort of like this intimidating thing. How do I put together a pro forma, sources and uses? What would you suggest to folks like that about how to get the financial piece started in greater depth?
Yeah, that's an excellent question. I think definitely maybe your first step would be, talking to a CPA that perhaps has experience with these types of deals. Especially if you're considering tax equity, because that's a whole other animal and a lot of complicated accounting tricks that you have to be aware of when putting together that model. So I'd start with a good CPA firm. There are also, I'd say, sort of independent freelancers out there that are finance people, and they have experience with putting together financial models. And so it's kind of finding those. I know of at least one that could help with specific type of projects, but I'm sure there are others out there. Usually that's something that's kind of done before you go talk to the banks, but I'd say don't hesitate to reach out if you have questions, but just be aware of the realistic kind of package items that the bank's going to need before they can really take your request seriously.
Okay, thank you. I wanted to bring in Chris on a point, and maybe Rosa, you'd have a view on this too. It's specifically on the technology front. You mentioned, I think, that you had a piece of technology that had been developed for quite a while, and that gave you great comfort in its operability. To the point that there's this sort of constellation of risks, like the three big categories. At the end of the day, assets stand or fail, frankly, on the downtime of what you physically invested in and is driving your commodity output. So say more about how that technology maturity has given you both kind of internal comfort to be more assertive and take on this debt, and what you might say to folks who are looking at projects but don't necessarily have their technology immediately identified, how that's impacted your relationship in the financial world with your lender and others when you've got something that you really can stand by and point to operating history around.
That's been huge, having the technology proven. not only from the aspect of working with business partners, but also from the aspect of the equity investors having faith that they're not, backing the next, archaeological site as opposed to a functioning power plant. So we were very fortunate to start this project in early 2000, before the financial bust that took down a lot of research projects along the way when extra capital dried up. But we were able to start at a demonstration size and test just numerous inputs, numerous outputs, and at a very small scale be able to see where the functional pieces of equipment needed to be stronger, needed to be changed. So we were able to, at a small budget level instead of a large budget financial risk level, test our technology. We've continued to test it. We're breaking into different field areas as well. But having the ability to know and have faith that what we were building would actually work at a full scale was key. And I would encourage people, if they have the ability to do something like that and test in a smaller scale, or even just change up the inputs a little bit and the outputs a little bit and fine tune as much as possible before they go into this project. It really does help to give confidence, not only to your own team, but to the business partners you're going out and working with. I know we all know projects that had the best of intention and the best of the science, and it's still not necessarily proven, or there's always some little things that can happen, even with the car you drive, right? The technology is old and functional, and little things can happen. So I think getting your hands around the technology and feeling really comfortable with it makes a huge step in the project being able to move forward and pick up the financing and pick up the business partners you need. And there's lots of really smart people out there who know the technology and are willing to help, even if it's just reviewing your scientific documents and looking through and making sure that all your T's are crossed and your I's are dotted. Even if you don't have the ability to test it in a demonstration size plant, I would highly recommend to people to get other firms involved to review your engineering and your technology, for sure.
It's really well said, Kristen. Thank you. And I'll come back to your early point about what that does for the equity potential partner and what you're doing, which is huge. That presence of equity goes such a long way to giving comfort to lenders, and just more importantly than that, frankly, on the operating level, a buffer for the things that are, inevitably going to happen, to put you a little bit, hopefully not too far off track, but having that equity cushion, and they might see their upside in a technology that performs even better than is modeled. So those things all reinforce each other. Okay. Thank you, Rosa and Kristen, for letting me grab you in to these moments of Q&A. I think that's it on our part of the agenda. Back to you, Elizabeth.
Great. Thank you so much, Dan, and thank you so much, Kristen and Rosa, for jumping in. I really appreciate that. I think we're all learning a lot. I know I am today, and please, if you have questions for Dan, Kristen, or Rosa, please put them in the Q&A, and I'm sure they'll be able to answer them via a written response, and perhaps if we have time at the end. But for now, we're going to move to Rosaldo, who very conveniently funded a bunch of the early technology that we're now benefiting from here in our state. While I don't know that it's at commercial scale yet, the CEC makes really fantastic, really significant investments in innovative technology. And so, Rosaldo, thank you for being here today and for talking a little bit about perhaps not only your funding opportunities, but also other state entities and non-state funding sources. Thank you.
Thank you. And same with you, Elizabeth. I'm learning a lot from this discussion. Just introduce myself a little bit. I'm with the Energy Commission's Research and Development Division. I'm currently a senior engineer and technical lead. I've been here for 14 years and I've led the program and projects on renewable energy research, and that includes bioenergy, as mentioned by Elizabeth at the beginning. So with that, I'll say I'll probably caveat that I am the least qualified here as far as talking about financing, more on the technology side. So I think most of what I will say or show here is mostly a listing of resources with a little bit of perspective on what I saw from these different projects and the kind of approaches that they took and benefited from. What I'll do is provide a little bit of overview of a few CEC grants, mention some of our bioenergy demonstration projects, key challenges that I've heard of, and how these are being addressed by some of our projects. Then I'll just provide a quick listing of some of the resources out there outside of the CEC, and most of those are resources that I think our projects have also tried or explored to support their financing needs. So with that, I also want to take the call for the support and sharing the PowerPoint. Can you have the next slide, please? So just very briefly, I think most of the participants in the workshop is also already very familiar with the different programs at the California Energy Commission. So just quickly mentioning the two key programs from Energy Research and Development Division. One is the Electric Program Investment Charge. This was a program that was established by CPUC way back in 2011. That was the program that followed the Public Interest Energy Research Program, or PIR. At the beginning, at the first investment plan of EPIC, there was an allocation of money from the technology demonstration and deployment that is specific for bioenergy. So the funding from the first investment plan, as well as the one from the second investment plan, are really the bulk of the funding that we're using right now to implement and complete a lot of these bioenergy projects. And then we also have the gas R&D program. This is a $24 million a year budget coming from the surcharge from gas ratepayers, designed to fund projects that are not adequately addressed by competitive or regulated entities. From the bioenergy perspectives, the gas R&D program is focused on really increasing our production and use of renewable gas and really reducing the dependence on fossil-derived gas. That includes supporting, improving the technologies that are using this renewable fuel. That includes efficiency, improvements in emissions, and those sort of things. For the EPIC program, really focused on improving the value proposition of bioenergy. We've heard quite a bit on different challenges, different issues, and that's what we're trying to do in the EPIC program. How can we increase the value proposition? How can we lower the different sort of costs involved with the bioenergy, at the same time improving the technical part of it, including emissions efficiency, and use that as a tool to help the state both in achieving our GHG goals, wildfire risk reductions. Next slide. So I'll just mention that the other division of the CEC, the Clean Transportation Program, they also have significant amount of funding to support development, deployment of technologies for fuel and vehicles. And most recently, they closed a ground solicitation supporting the forest biomass called Ultra Low Carbon Fuel Demonstration Commercial Scale Production, supporting demonstration scale as well as commercial scale production facilities. with the purpose shown here, reducing GHG, prevent wildfires. So I mentioned this is completed. If you're interested in seeing the details of that substation, you may check the website for this substation. And then I think just very quickly before talking about these different bioenergy projects, I would say that from experience from these different programs and for folks who are applying to these different grant programs, it's very important, at least from our experience reviewing and looking at the different applications, very important for different applicants to look at the requirements for different stations, making sure that they are addressing the different requirements. They make sure they're reviewing, looking at the different criteria, and again, addressing the different criteria. And also highlighted or emphasized earlier, partnership is very important. I think it's been key to most or all of these successful projects that they have the right folks, the team that knows the technology, the financing and policy requirements. So I think that's the only thing I would like to add there. And with that, just shifting very quickly to some of our bioenergy projects. This is just to show you the 4 bioenergy demonstration projects that we're funding under the EPIC program. These are community scale, ranging from 1 to 3 megawatt projects, funded in the first and second investment plan of EPIC that I mentioned earlier. You've heard about the Hot Creek Bioenergy from Christine and Rosa. North Fork Bioenergy Project is another one of those. And then we have a project in Mariposa, and then Comptonville Bioenergy Projects. Aside from these 4 community scale projects, there are also other, I would say, smaller scale applied research and development projects that are helping to develop the technology, addressing the technology questions that we heard from the previous discussion, addressing some of the technological challenges, how these technologies can be improved in terms of the operation, in terms of the efficiency, in terms of the emissions. Now, there are a lot of lessons learned. These projects were funded in, I think, 2016, 2017 solicitation. And I would say all of these projects are still active. That's after several years now, going 7 years or more, at a different level of, say, progress and development. And we've seen a lot of different challenges. We've heard about the questions about the technology, and those are just one of some of the technological challenges. But there are also non-technological challenges that were also discussed previously. If we can move to the next slide, please. Yeah. Again, aside from the technological issues, making sure that this processes, systems, and technologies are proven able to operate at this scale, required scale. There are several of these non-technological challenges that these projects encountered. And just to very quickly mention those, basically repeating some of those that were already mentioned earlier. Obviously, capital interconnection and other issues associated with cost. We've seen that capital costs have been a major challenge for these bioenergy facilities. Working with our utilities had been one of the challenges that they encountered. It can be a major cost factor. Like, for example, you'll have to put new power lines or upgrades depending on where the facilities are located, just to be able to accommodate the new bioenergy facility. The current cost of bioenergy from biomass, of course, it's still being viewed as really high relative to, of course, the other renewable energy. And so the challenge really there is continuing work to address this cost, looking at ways to lower the cost. Part of the discussions in the past have been looking at ways to quantify or monetize some of the benefits of the bioenergy to hopefully reduce that cost. There's been a lot of discussion about financial barriers. Probably don't have to go over that, but just kind of attesting, we've seen this really big challenges to these bioenergy projects. They found it really difficult. It's impacted by high costs, of course. We think that the lack of demonstrated commercial success have been a factor in terms of building the confidence from the investor. There's been mention about the securing feedstock contracts earlier. So yeah, just kind of repeating that. There was at the time a perception about the uncertainty in the power purchase agreement or biomass program. I can't comment on how that has improved, but that was being perceived in the past as some kind of uncertainty. And again, just being able to value or monetize some of the benefits, including environmental, societal benefits. And then the others, citing and permitting, it's really, I would say, depends on the counties and entities, agencies that are reviewing the permit. For most of these projects, I think for all of these projects, we've seen some delays in securing different permits to build a project. I think some of the factors are just both from the applicant side and I guess the county side, understand the different steps, standards, and processes involved in terms of providing this permit. The lack, I think, of environmental and emissions data for most of these technologies, because it ties to the lack of commercially operating technology. So there's not a lot of environmental directly from operating facilities. I think it's impacting that delays as well. So with that, what I'll do in the next slide is just very quickly mention a couple of projects that are addressing this. Again, I'm just here to provide a reference for two projects as an example of those that are addressing this. And I would encourage everyone, if you have a question, to connect directly with the entities that are involved with these projects. I'm glad to see that Greg and Martin from Watershed Research and Training Center are both on the line, and I think can speak better of this the project in the North Fork Bioenergy. But anyway, what I decided to do is just mention a couple of projects with different scale. One is really small scale, 30 kilowatt project from the Sierra Institute for Community Environment in the Biomass County, running on integrated biomass boiler and an organic ranking cycle. Funding is at $2.6 million. From our perspective, the match funding is only about $652K, but I'm guessing the cost of the whole system is probably more than that. But the key, I think, from what I've seen from this project is one of their approaches, business model, partnering with a third-party development, and then they're establishing the contracts with their partners, including in this case for the Sierra Institute for Community Environment is the Biomass County agreement that also provided the match funding. So it's a completed. It was operational at the time. And then the other example is North Fork. It's a larger scale 2 megawatt gasification facility that's underway. And again, from our perspective, the funding, the grant is only about close to $5 million, with match funding of from $1.3 million. But obviously the cost of this project is way more than that. And the key here is having the right partnership to provide, kind of address the different resources for match funding. And I would say that Greg, who's on the line, has been very, I'd say very good. An expert on looking at different approaches, process, entities, agencies to approach to address the match funding, the funding requirement for project of this scale. And some of the examples that I will actually show in the next slide is some of the resources that Greg and the Norfolk project have also tried to explore for to support the project. And one of those, as shown here, is the California Pollution Control Financing Authority. And from this point on, I would say that I don't have I'm not in a good position to talk about these different programs, or I'll just kind of go over them. These are the resources that are found on the available on the internet, and I would encourage you to take a look and explore. For example, in this particular case, the California Pollution Control Financing Authority, I provided the website there. They do have a green bonds program, and the Norfolk project is one of those that benefited, as shown in one of the figures where they received funding from both from the sale of both taxable and non-taxable bonds, totaling to about I think that's about close to $20 million from what I remember. I think listed there is 15 million and another 4 million. So yeah, I encourage you to explore and you connect with them directly if you have question. The other agency that I think also helped different bioenergy projects and different renewable energy projects is the California Alternative Energy and Advanced Transportation Financing Authority, or CAFA. If you could switch that slide, please. Again, these are just one of the resources that you can explore, and I encourage you to connect with them directly for the programs. And similar with CPCFA, they do have a clean energy financing program. And then I think lastly, from my list, I mentioned the clearinghouse in the next slide. The clearinghouse Community Development Financial Institution, or CDFI, again, this is direct from the website and one of their website featuring the Norfolk project in terms of the funding that they provided. And so I'll encourage you to connect with them directly, check the website and look at the requirements. I think I can't speak to what they are, or even the status right now. My intention really is just to show you these different resources that you may explore and you know connect with directly. And then if you could go to the next slide, there is actually a grants. Yeah, okay. So sorry about that. Dan mentioned about the loans program from the DOE. That's a big resource. And the other thing I will add is the different grant funding programs from the energy efficiency from the ERE, particularly the Bioenergy Technologies Office. And these are just some of the funding opportunities that are available. I think some of this may have already closed, but again, I encourage you to take a look at their website, the different funding opportunities that may support the project. Next slide. I just wanted to show that in case you're not familiar with this one yet, there's actually a grants portal, which is a project by the State Library. I think it's a good place to check for potential resources for different grants program in case you're interested. And finally, I had to mention that in the next slide, I encourage you to also explore the California Energy Commission's Empower Innovation, to look at the resources, find establish partnership, and just take advantage of the available resources and tools there for both partnership, resources for financing, and just to help in moving the project forward. All right, so that's what I have, and I guess I think a couple of words I would say is that what we've seen from these different projects. One, I think I can say that the state grants and financing have been key in terms of building the confidence, and from what we've seen, these different investors, different agencies are also looking at how the projects are performing and how the state is providing funding. So it's really kind of adding to their confidence in providing the financing. And I'll repeat some of those in terms of the partnership. Again, paying attention to the requirements for these different grant programs, be able to say increase the success of getting the funding. And with that, I would say thank you, and looking forward to further discussion in case there are any questions.
Great, Rosaldo. Thank you so much. I always learn something from your presentations, and the investment that the CEC has made in California's energy innovations is really impressive. So thanks for presenting that. Any questions? Oh, Chris is asking about the video being available. Yes, we will need to do a little bit of editing, so it'll probably be a couple weeks, but we'll send an email out to the folks who attended here as recorded in the Zoom attendance list, and then probably out to the Department of Conservation's Biomass Energy listserv as well. Any questions for Rizaldo? Other funding questions? Greg, you've been invoked several times in this meeting. So if there's anything you want to say, I would love to give you space for that. But appreciate you and other biomat project developers being sort of guinea pigs for our state programs here. Yes. Okay, sir. Let me see here.
And if I didn't mention it, I want to thank them for listening and participating. And your perspective is very important here. Thank you.
Hey, can you hear me?
Yes.
Yes.
Hey, look, I just wanted to say you guys are beautiful people. And I know I speak for every developer out there. And someone said it earlier, without the people at the state of California getting on the phone with our bankers, talking to them about what's going on in state policy, making them feel comfortable that while we might not have Kleiner Perkins yet in bioenergy, we have you guys and you are powerful. All of us owe you assembled an incredible debt of gratitude. So keep up the good work.
Thank you, Greg. Along with West Biofuels, you guys are all inspirations for what we're doing. So really, really appreciate that. Rizaldo, I do have a question for you. She sees the Biomat program is for facilities up to 5 megawatts. Is there an opportunity for multiple facilities under the same sponsor to apply for 2 separate Biomat contracts?
Yeah, and I'm not sure I right person to respond to that directly. Since I think that's a CPUC question. I don't see reason why they will not be. I mean, you're talking about 2 different facilities or same facility. Or...
Yeah, there's not additional detail. Lindsay, if you'd like to raise your hand, we can talk with you more about that, or we can put you in contact with the PUC person who runs the Biomat program. Like Rizaldo mentioned, that might be a better question for them, unless there's another panelist who would be interested in answering that.
Looks like there's a comment from Greg there.
Ah, thank you, Greg. Rules against daisy chaining. That's good to know. 1 contract per contiguous property. So potentially maybe if it was on different properties, but. Right. All right. Great, Lindsay. Thank you. Awesome. Well, if there are additional questions, you are welcome to reach out to any of us. I know Rosa shared her contact information, I think in the Q&A. If folks are comfortable putting your emails in the chat, please feel free to do so. Or folks, you're always welcome to reach out to me or Nicole, who just put our listserv link, the Department of Conservation's listserv link in the chat also. And we are happy to connect you to folks here today. Yeah, I think that's it for now. We do have a couple of minutes. So if any of our panelists have anything else they'd like to say or close out with, you're please welcome to do that. Or if you would like to make any comments on additional workshops you'd like to see us do. We know that this is a developing industry space, and as you've heard today, the state is very interested in helping to make this happen. So if there are other things you're wondering about, if you just want to know the state's position on particular policies, or if you would like an open forum to talk through issues with other developers, we are happy to help in facilitating that. So thank you. Our panelists are putting their contact information in the chat. So thank you for doing that, everyone. Any final comments? All right.
Just say, keep at it. We're on your side. We need you.
That's a good
Yeah,
closer,
yeah,
Dan. Thank you, Rosaldo. Thanks, Dan. Rosa, Kristen, thank you so much. Yeah, go California. Thanks, Greg. Have a good afternoon, everyone.
Thanks all.
Thank you.
You all done?